Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Brent Donnelly. He's the president of Spectra Markets. Good to see you, Brent.
Hey Blake, how you doing?
I'm doing great. It's been a while since we spoke last, and just as the last time we left off, you had just launched your AMFX subscription service to the markets. How things been going with you?
It's been great. It's really fun because part of my motivation for coming here and forming this new company was that I always worked at a bank before, and it was always very limited who I could talk to and who I could send my content to. And one of the benefits to me as a trader, and also just intellectually, of having a broader distribution is that I get to talk to a lot more people. So now my distribution is a lot bigger, and it's really fun. And also, working at a bank is working inside a very large bureaucracy, and that's most of my career was inside a bank. So it's nice to work in like a smaller, 20 people kind of business. It's a lot more flexible, and I can criticize the Fed in my piece and not feel like I'm going to get arrested.
Well, that's important. Well, you know what? We might do some criticizing here in a little bit, but I actually wanted to ask you a little bit about the crypto market, because you've been pretty bearish on cryptos over your last few issues of the macro tactical crypto reports you've been putting out with AMFX. Let's discuss crypto a little bit, because we've seen a nice decline, depending on what product and what instrument you're using, maybe 20 to 30% lower in some of the main names. What's your reasoning for being bearish? Are you still bearish? And what are you looking at in particular?
Sure. So I am structurally a little bit bearish now, but I'm not as bearish as I was. So I was short Ethereum from around 4,200 in November, and my target was 3010. So I kind of got lucky on the weekend it hit. And this is not all hindsight. Everything is always, as you know, I publish all my ideas in real time, but there's some big picture stuff that is bearish crypto in the macro world, which is the Fed tightening. And I think most people have come to realize this at this point, that crypto is a risky asset that is somewhat subjected to the liquidity cycles, the same way that S&P 500 or commodities are. And then at the same time, on the sort of the more internal stuff, we're at the worst part of the Bitcoin halving cycle right now. So if you just look at the 4-year cycle, this is the period, and the sample size is small, but in prior parts, this is the part of the cycle that has been rather bearish. And then in November specifically, you had a really big convergence of a lot of crazy sentiment indicators. To me, the Staples Center being renamed crypto.com, I pointed that out at the time, that's very reminiscent of 1999.
Isn't it?
So I'm always on the lookout for those anecdotal indicators. You have to be careful with them, because you can cherry pick ones that just happen to fit your view. But so generally on crypto as an asset class, I tend to be agnostic. So I find that the world is very maximalist, or very, haters. So you basically have the haters and the hodlers. And really my point of view is more like, okay, yeah, it's a cool technology, and I think it will probably be very influential in the future, but that doesn't mean that number goes only up, right? There's massive corrections. Look at 2018, crypto dropped 85%. So my approach is to kind of try to look at it in a macro, through a macro lens, but then also through the lens of someone who's agnostic. So, my view is generally that Bitcoin will probably serve its role as a store of value and kind of usurp gold over time for a bunch of reasons. And then 99% of all the altcoins will go to zero, because each one of those altcoins is essentially like an option on infinite upside, right? And that's why you see, if you go on to like CoinGecko and just type in a few random letters and look at just a random coins, essentially almost every single chart looks like a mountain, right? Looks like Mount Everest. And the reason for that is that you have two things. One, people chasing lottery returns, and FOMO, momentum chasing, which is like a big part of it. And the second part is, if Solana or Phantom or whatever, or whichever coin ends up being some kind of standard for transactions or for smart contracts, that coin is going to be worth a lot, an infinite amount almost. So there's like this optionality embedded in them. But generally, I feel like if you look at the top altcoins in 2013, 14, 15, 16, all the way through to now, they're barely ever the same ones. They just cycle in and out, and it's all a hype cycle. And then behind the scenes, you also have the influencers just getting paid to pump things so that the whales can sell. So I'm pretty skeptical overall on like the altcoin scene, because I think a lot of it is shammy. I don't know if that's a word, but scammy, I guess.
It sounds good.
But I'm overall, I'm bullish Bitcoin. And then in terms of like where we are in the macro cycle, I had been bearish, like I said, from like 4,200 to 3,000 in Ethereum. Now I think we're in a sell rallies kind of period, where Fed tightening is not going to be good for crypto, and so you want to sell rallies right up until essentially the Fed is close to being done tightening, and they haven't even started tightening.
Yeah. Well, talking about like the having cycles, and I know you have a small sample size, but I have to ask you the question, and I hate this because it's so corny, but is this time different, being that there's so much more institutional adoption? It's kind of woven in the fabric of Wall Street nowadays, and you've got futures contracts written on some of the bigger names, so you're going to find some sort of support much sooner than we would have, let's say, 4 years ago, right?
Absolutely. So I agree with that completely. And that's part of why actually what I've been writing about the last couple of times is the idea of being long Bitcoin versus short whatever altcoins you think are not good value, because that's exactly it. The institutional bid will be there in Bitcoin, but it's not going to be there in the sandbox or whatever other coins, right? Because the custody issues and all that don't allow institutions to buy much other than a little bit of Ethereum and mostly Bitcoin. So if you're playing for the institutional bid, then you want to probably be buying Bitcoin, and if you can, it's hard in the US, but it's easier outside the US. Short coins that you don't like, because I do agree with that. Also, I don't really think Bitcoin is in any kind of speculative bubble or anything at the moment. It's if anything, I feel like the bubble would be Web3 or GameFi and things like that. But certainly, I would say, I would be more bullish Bitcoin right now. But I'm kind of like, I don't have a strong view other than I think Bitcoin outperforms Web3 tokens. That's my only view right now in the short run.
All right. Well, thank you for your view. I think it's really important. And by the way, I love what you're doing, writing about cryptos from time to time. I know it's not as consistent as your AMFX letter, but having that component, I think, is really important for the trading community at large. Let's turn our attention a little bit to the last couple of days price action. I know everybody that's going to be watching this is watching it a day late, as we go through the editing process and releasing the video. But we had Fed Chairman Powell. He had his hearing, and he went through the Q&A session as you would expect, and talked about inflation as you would expect and everything else. I don't think the narrative changed a whole lot there. Maybe he was a little bit more dovish, but today the CPI data came out, and the dollar really sold off. And I was before we hit the record button, we were talking a little bit about the price action in the dollar. Did the price action in the dollar, the selling off of the dollar, surprise you? And how do you view that near term, or maybe even over the course of the next couple of weeks in the dollar?
Sure. Yeah. So I don't think it was that surprising, because that's actually kind of been the pattern with the CPI data, is that yields have tended to go down as well. And I think what it is that people are very anxious about inflation inside and outside of finance. So it creates a lot of tension into these CPI numbers. And then it's almost like whatever the number is, you're just like, okay, that's over with. And then there's a kind of a release valve after that. So the thing with the dollar now is that people are very focused, both. So I talk to a lot of institutions, but I also talk to a lot of retail traders. And I feel like generally people are too focused on the interest rate side and the Fed, and not focusing enough on what's going on the equity side. So The ideal dream scenario is that equities and rates are going the same way, and then it's a clear signal for the dollar. So for example, like when when equities were rallying with Nasdaq in the lead and US rates are going up, that's, all roads point to a higher dollar in that case, because you have money flowing into the US from all over the place, into fixed income and into equities. But what you're actually seeing now is, if you do, I don't know if you can show a chart and overlay that later, but if you do something like, what I look at is the ratio of the NASDAQ to international equities, and you can pick whatever index, then you'll see that it's actually been tracking the dollar very well. And that makes a lot of sense, because all the money has been flowing into US tech for several years, and that's been a big source of support for the dollar. So last year, people expected the dollar to kind of, I was going to say collapse, but people expected the dollar to go down aggressively.
They were bearish, right?
Yeah, because of the twin deficits. And what saved the dollar essentially was the equity flows. And now it's a funny thing, because going into last year, the market was mega dollar bearish at the lows. And now the market's mega dollar bullish at the highs. And that, obviously sentiment and price move together a little bit. So it's not like super surprising, but it's kind of ironic that everyone was long euros at 123 this time last year. Now everyone's short at 112. So there is a little bit of a positioning factor, but I think what's more important is the money going into European equities, into EM equities. So you're even seeing when there's been these periods of pretty aggressive risk aversion lately, emerging markets actually haven't done that badly. And I think part of the reason is that when rates are going up like this, people get a little bit nervous. When real rates are going up like this, people get a little nervous about tech. And so people have been trimming tech and buying value and buying commodities, basically buying anything other than tech. Banks obviously have been ripping too.
Sure.
And when that happens, that's not great for the dollar, because the relative flows are going to mean that that you're going to see dollar selling as equity managers have to take off the hedges. And actually, I don't know if this is too inside baseball, but in periods when you see this big relative equity flow, you tend to see it a lot in the New York morning, right into the WMR at 11 a.m. So, and that's what we've been seeing, is like a lot of dollar selling from 9 a.m. to 11 a.m.
Yeah.
So people that are trading, that's a pretty micro observation, but anyone trading short-term FX, just keep an eye on those two things in combination. So you look at relative equity performance, US versus rest of world. And then at the same time, you look at how is the dollar performing, especially from 9 a.m. to 11 a.m., because that tends to be when global asset managers rebalance hedges.
That makes a ton of sense. Well, let's talk a little bit more longer term. Are you more neutral the dollar right now, or do you still feel that the dollar has more upside, going into 2022?
So I'm long euros right now, and I'm generally kind of bearish dollar. I came into the year bearish dollar, but like a little bit hesitant. So I just went long euros a few days ago, because I was kind of hesitated for the first couple of days to kind of see what happens, because there tends to be a lot of randomness in the first few days of the year.
Yeah.
But my feeling is that, so right now you have essentially March priced for the Fed, and then you have quantitative tightening, or QT, pretty much priced for somewhere between July and September. And so if you think of like where we've come from and where we are in terms of Fed pricing, there's been an absolutely gigantic move, right? People were not expecting QT to even be in the conversation, and now it's like deep in the conversation. And yet the dollar hasn't appreciated in the last few months. So that's a pretty like good news, bad price type situation, where you could argue the dollar definitely should have been rallying, and it wasn't. And now, if you're dollar bullish, what are you looking for? Like, are you looking for 5 rate hikes from the Fed? Are you looking for QT to happen in March? Like, it's really hard to say what could be more hawkish now that we've got here. And I don't generally like saying like, oh, too much is priced in. Sometimes people will just say that all the time.
Yeah.
And more just keeps getting priced in.
Right.
But I think there are selective moments where you say like, listen, the odds of the Fed being able to hike and do QT in a more aggressive way than what's priced right now, I think are getting pretty low. So to me, that creates an asymmetry where, the odds of, in fact, the central banks that people perceive never move, are actually those at the margin could start to actually be in play. So we went into this year. So at Spectra, we do this thing where we aggregate all the bank strategists' outlooks. And one of the big themes for this year was supposed to be central bank divergence. So Fed tight, ECB and BOJ don't do anything kind of thing. So that's divergence, good for the dollar.
Right.
And in reality, actually what you're getting is like JP Morgan today is now calling for 3 ECB hikes in 2023. The BOJ looks like they might change their wording on their statement to say downside inflation pressure is no longer the top priority. So what you're actually seeing is convergence. Now that doesn't mean the BOJ is about to hike, but all these things are all about marginal changes, right? So if you thought the Fed was going to be diverging, and what's actually happening is ECB and BOJ are converging potentially, then that's a pretty powerful theme, and that could be something that drives the dollar lower. And I mean, how I trade, but I tend to be more like 1 to 3 weeks time horizon. So anything I'm talking about is generally kind of like riding a theme, and then I would always reassess. Like really, I'm looking for like 116 in euro as a target. So I'm long in the mid 113s, looking for 116. That's kind of the time horizon that I go with. And I think especially now, most of the major events are out of the way now. So FOMC really is like the next big event. Now that Powell testified and you've got the CPI out of the way. Yeah. So to me, path of least resistance is lower dollar into FOMC, and then I'll probably reassess.
Yeah, that makes a lot of sense, which is just only 2 short weeks away, by the way.
Yeah. And just to pivot back to the crypto stuff a little bit, that's part of the reason why I'm not bearish crypto anymore, is that there is a pretty strong correlation between the dollar and crypto as well. In fact, one of the key, if you spend a lot of time on crypto Twitter, one of the key narratives for crypto higher was dollar debasement. And so for a while, from November till now, that just was nonsense, right? The dollar was rallying. It was rallying pretty strongly, and the Fed was at the margin moving, tightening a lot earlier. So stronger dollar tends to be weaker crypto. Now you've made that adjustment in the dollar, and so that makes it a lot easier for crypto to either do nothing or go up for a little while, because you don't have that pressure from the dollar.
It's really so interesting, Brent, because I talk to so many traders, and a lot of crypto traders are really, they don't understand the macro backdrop behind the markets, and they're like, their common wording to me is things are different now because there's institutions involved now. And my answer to them is, yeah, a lot.
Yeah.
Right?
Guess who's selling? The institutions.
Right.
I mean, that's who was selling, right? That's one thing that I think people don't always acknowledge, is that, a lot of institutions and high net worth individuals have been long crypto for the last two or 3 years, right? Like the faster moving dudes, like, all the principals in places like, I'm just picking random names, but
of course,
the principals in places like Galaxy and all that, every single one of these major crypto institutions, every single individual in those places is long a shit ton of crypto. And that's who was selling, was people taking money off the table because they see that the macro story or the macro narrative doesn't look as good. So I don't always buy that the idea that institutions are only on the bid. I mean, institutions also sell, although net, as people increase allocations, the net on the bid will be larger.
Of course. Well, Brent, I think if we can guarantee one thing going into 2022 is that we are going to get increased volatility, because interest rate expectations are shifting. They're not only moving, but they're shifting with central banks, and that's going to create a lot of dislocations in all the markets. Real quick before I let you go, what's your thinking about the next month or two? What's your kind of target asset class that you're really focused on right now?
Well, It was crypto. And like I said, then the take profit hit in Ethereum. And now I feel like I'm not as inspired like by the landscape in crypto right now, just from a trading point of view,
Yeah, of
not
course.
from like, will Web3 be awesome point of view. So I'm actually just more focused on G10FX. I think the breakout today, which would be yesterday, I guess, in this video, in euro dollar is interesting. And you don't have a lot of events to worry about. So like I was saying, the path of least resistance kind of looks good. And volatility is implied volatility is very low. So it's pretty easy to put on G10 trades via options right now as well, because volatility is cheap. So yeah, that's really my main focus is just, I think equities kind of found their base and they keep bouncing off the 55-day, but I don't think they explode higher. So to me, the best trade in the next couple of weeks looks just like short dollars, specifically like euro up to 116 kind of thing.
All right. And I'm gonna ask you one. This is kind of a tricky question. This is something that I'm faced with a lot of currency traders that I, deal with on a daily basis. A lot of the old adage of, we get some risk aversion. And let's just say S&P pulls back 7-8% from current levels and we get, a decent sized correction. What point does the dollar catch a bid? And I've always been in the camp that, we need a sizable correction before the dollar catches a bid across the board. But are you going to see the dollar perform better against certain currencies if we do see some sort of, let's just say, S&P back down to 4,300, 42, 44, 4,400? What do you think the dollar is going to perform like then?
So around 3 years ago or so, I would say, but this has always generally been true, even like when I was trading in 2004 or whatever.
Yeah.
Is that it's good to split the currencies into the buckets of basically like offense and defense. And so euro dollar and dollar yen euro and yen tend to be more defensive and Swiss. And then the commodity currencies tend to be more like offense. And so if you had, say, like a 10% drawdown in S&Ps, I could see currencies like Aussie and Canada selling off pretty aggressively, but I could also see dollar yen actually going lower. So like yen rallies, even though Aussie sells off 3%. And that's why a lot of people hedge equities or trade equity proxies through cross yen, specifically Aussie yen, because you actually sometimes can get juice on both legs. And especially going back to the earlier comments, if the market or the world is massively overweight US tech and US equities, which they are, then there's definitely a dollar negative aspect. And so there isn't like a rule, like if equities go down, dollar has to go up, as you know.
Yeah.
It depends a lot on positioning and a lot of prior, initial conditions. And in this case, the initial conditions are the market's already long dollars and the market's long a lot of US assets. So it would take a pretty high velocity and large move before you get then what you're describing, where like there's the panic dollar buying. That's more when there's like a liquidity issue, and then you start to see balance sheet reduction from foreign entities and stuff like that. That's not really in my playbook right now. I mean, even when equities were selling off in the last few days, Aussie wasn't really going down, right? It was, if anything, it was kind of like holding in, and then as soon as equities stabilize, it's like whoosh.
Yeah.
So the quick answer is that stocks going down now is more broadly negative dollar from a flows point of view. And so it's negative dollar yen and bullish euro, I think. And it's kind of like crosswinds for the other currencies because it's bearish for the risky assets, but then it's kind of bearish dollar at the same time. So what do you do with Aussie dollar? You just leave it alone.
Yeah, that makes a lot of sense. Well, Brent, I tell you, if anybody's a crypto trader or an FX trader, they've got to be listening to this video and really enjoying what they're hearing. And I want to say I really enjoy having these conversations with you. And if I don't know anything about you, what's the best way for me to follow you?
The easiest way is just to go find me on Twitter, Donnelly_Brent on Twitter. And then my website is there and everything's there just to make it easier.
Awesome. Well, AMFX is world renowned, wonderful daily newsletter he puts out. Brent, I want to thank you for your time. It's always enlightening, and it's so great to be able to meet with you again. I look forward to our next conversation.
Awesome. Thanks,
All right.
Blake.
Have a great one.
All right. See you later.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.